Hello traders, D7 here with freetradingvideos.com. This is the weekend edition. Let's take a look at the markets. We're looking here at the S&P Daily. The S&P Daily is giving us a formation that I wanted to bring to everybody's attention. A number of users have chatted with me and also sent me private messages and also comments. And you're seeing a pattern that I wanted to save for the weekend edition because this is a big pattern that nobody should be ignoring. As you notice, looking at the S&P Daily, I have taken off a number of lines to try to clean it up a little bit for easier viewing. And I also, so here would be a good time to pause your video, redraw your trend lines if you're drawing your trend lines like mine and you want to follow. Now, the thing I want to show you is this. What we have going on is a beautiful bull rally going straight up, but we happen to be at resistance. I initially had this trend line drawn from these two, but if you bring it back, you also capture this swing high back in February. So you have a major swing high here, a major swing high here, and another major swing high here. That is precisely where we're smacking our head right now. Puts us about at the 980 mark. Last time we hit this area, we dropped. The time before it, we dropped. This time, we dropped. So, if history repeats itself, this should also drop. So I'm expecting next week to be bearish. Now, the formation I want to show you is this. We have a rising wedge formation. A rising wedge formation is in fact a bearish formation. It doesn't mean it's going to be bearish. It just means it is a statistically bearish formation. Usually shows the bulls running out of steam. Now, if it was going to stay strong, what you would have is a trend line like this one, parallel going up. So for this to stay strong, what we have to see this coming week is a breakout. I do see that there's an opportunity to go to 1,000, 1,006 to be exact on the S&P Daily. And that's based off of a high. If we go back right here, we have a swing high here and a swing high here. And this is back October 2008, November 2008. We go back here. I could see us getting to this level, which puts us at 1,006. But to do that, we have to break through this trend line or run up this trend line and hit it. So anything can happen here. Now, this can break through and smack, and that would be very bullish if we can break through this line. That would kill the rising formation that we have on the rising wedge. If we do crawl upside, that means we're not able to break through. That would continue to be bearish. If we drop, we're just in this formation. The question would be, where are we going to bounce? Now, if we come down, a nice area that I could see as bouncing would be about right here. If we do pull back next week, I could see us down here in the 920 area. 920. You know, maybe as low as 915 to 920. I could see that taking place. Now, the scary part here is if it breaks through this. And if we break through this, we have major support of this line. That line I've shown you a zillion times. That goes way back in history. So if we break through this line and we bust through all these support areas, including this big monster blue trend line, then the markets are in significant trouble. Significant trouble. So remember this this video. Now let me throw a monkey wrench into things. If I go back, scrunch this up a little bit, we have an inverted head and shoulders also, which is bullish. Let me show this to you. You have a shoulder, head, shoulder right here. Shoulder, head, and shoulder. It's an inverted head and shoulders. This is a trend reversal to the bullish side that is very bullish. So we have a rising wedge, which is bearish, and we have an inverted head and shoulders at the exact same time. Go figure. That is bullish. Now, the thing that we want to watch here on the on an inverted head and shoulders is, does the neckline get pierced? Here's the neckline right here, from this swing high to this swing high, and we pierced it. Bam, right there. So if we zoom in a little bit, you can see this a little clearer. There's our trend line, this red line. We busted through it. So that confirms this inverted head and shoulder formation, but does not get us out of the woods yet with this rising wedge. Isn't it interesting? We did have a head and shoulders formation, which is very bearish, not too long ago. Shoulder, head, and shoulder. Those are bearish. Trend reversals, they should crash and burn. But instead of crashing and burning, we actually went into a bull flag right here. Our trend line, our neckline, was pierced. We pierced it. But instead of crashing and burning, we rallied north. So there's a small version that's inverse to this large version that we're dealing with here with the inverse head and shoulders. But at the same time, we have a bearish formation. So I took a long time to really microanalyze the S&P daily. I'd be remiss if I did not bring in the weekly. And the weekly here, looking still very bullish, shoulder, head, and shoulder, inverted head and shoulders. That's very bullish if the neckline gets pierced. And let's draw in the neckline. I'm going to draw it in here, going from this swing to this swing, right there. And we pierced it with a vengeance this week. Bam! Very nice. And then we had a swing high right here that put us around 968, 970 area. Blasted through this. Now we're sitting at 980. We're at the 980 area. And I could definitely see us as this, at this level right here, which would put us 109 to 106. 106 to 109 could certainly be a resistance area. That's on the daily, and that is on a weekly. So significant resistance at 1006 on the S&P. We are looking very bullish there. Now let's take a look here at the monthly. The monthly, oops, let me get rid of this. The monthly, we did make a lower low, but when we made that lower low, we did not stay. We rallied right back. Now we have a higher high and a lower low. This was a great opportunity for the markets to crash and burn. Right now, it's showing a lot of run here. So if we could rally again, we could get up here to this 1050 area on the S&P. If we get there, that's still a good area to see a reversal take place. So there you are. Thank you for being a part of the weekend edition. And just let everybody know, those in the V newsletter will be getting a special announcement of a special opportunity that Matador and I are doing together August 1st, 2nd, and 3rd. And yeah, looking forward to sharing that with everybody. So anyway, hope your trading is going exceptionally well. Keep your head down, your eyes on the charts, and make yourself some money.